G'day ladies and gentlemen, and welcome back to another Bitcoin update. I have no camera today. I have no camera because I'm a little bit sick. I've just got back from Sydney a couple of days ago. I think I caught something on the plane. So I'm having a bit hard time speaking properly. My voice is a little bit strained, and you might notice that in this video. And that's also why I have no face cam. But we'll try to get the best amount of analysis I can do in the shortest amount of time I can possibly do it. Because speaking is not really my forte when I'm sick. But let's get into it. I have a few things I want to discuss in this video. First and foremost, I have the daily chart and the Bitcoin support level we're testing right now at 29.6k. And the second part of this video is going to be looking at the macro logarithmic chart and the fact that previously we said we actually had an ascending wedge formation on Bitcoin. I don't think that's as certain as we said it to be. I don't think that's as certain as we might have claimed it to be. I think that actually, it's quite up for interpretation, but the one thing is certain, that uptrending support line is there, but the top line is a little bit iffy, and we'll get into that because there's different little nuances in that argument that could be bullish or bearish, regarding on what your preferred bias is. But we'll look into that again in the middle of the video, and then the last part of the video, we'll briefly look into the S&P 500, the gold, the dollar index, VIX, and all of that in relation to Bitcoin. Its correlation to Bitcoin. We have a chart right here on-chain which says that Bitcoin is basically becoming more and more independent from all of these assets, whether it be reverse correlation or positive correlation. And that's obviously a good thing, but it's also interesting to see, with what's going on in the markets right now. So, 3 separate parts of a video. Let's get into the first one right now. Again, I'm going to keep it short specifically because I can barely put a sentence together right now, but I'm trying to get it out for you guys, so hopefully you'll appreciate the analysis here. Let me see what I can do for you here. Daily chart, what have we got going on? Okay, let's see. Bitcoin is broken down from an ascending wedge formation, ascending channel formation, I should say. On the daily chart, the yellow formation we saw here was a valid formation. It had 3 retests of the lower side, and 3 or 4 retests of the lower side actually, and 2 retests of the upside. That was hence a valid ascending channel formation. We have broken that to the downside now. You could argue that the entire channel was irrelevant, and what was more important is this pink line and the top yellow line. So if we go ahead and remove the uptrending yellow line, we can see that you could actually argue the case that Bitcoin is actually in a larger ascending broadening wedge formation. So realistically, the channel breakdown is irrelevant for all intensive purposes. And by the channel breakdown, I mean the channel breakdown, supposed channel breakdown we saw over here, is irrelevant for all intensive purposes because for all we know, we're still seeing an ascending broadening wedge. And so we have to act as though we're seeing an ascending broadening wedge and not take the breakdown into consideration. With that said, it's not a hard thing to do because basically 29.6k, where this pink line is, the bottom of the ascending broadening wedge, is actually the important zone we need to look at on Bitcoin. It's the important zone. That is the important support level. That is the level that's holding us up right now properly on this range here. We've got, as you can see, it's very clear to see. We've got a little peak here. We've got a little plateau, a little place we're holding on a mountaintop here at around 29.6k. It's very clear that 29.6k level is what's holding us upwards horizontally. We've tested that in the past for resistance and support. You can see a couple of times over here, even if we're zooming back to May 2022, or even if we zoom back here to 2021 or 2020, that level at 29.6k is very important. And so, yes, I would say that right now, what we need to be looking at on the main part for Bitcoin and short-term, medium-term analysis is basically not overreacting until we break below 29.6k. And by that I mean don't take any bearish positions until we break below 29.6k. That's me personally. I'm a breakout trader. As for upside positions, I don't recommend taking upside positions either until we break above the red the red rectangular range here. And what is that red rectangular range? That is a range over here at 32.1, at around 31k to 32k. And that is the region, which we saw the bear market bounces, the bull market bounces from, right? And the bear market rejection over here. That's kind of like the bottom of the bull market playground of 2021 and 2020. And so, yeah, basically, to summarize what I just said, Bitcoin has technically broken down from a structure in the short, medium term, but the structure was largely irrelevant. And what we've actually found now is that 29.6k is very, very relevant. And in order to kind of have, a profitable position in this range, I personally do not recommend, or at least I personally will not be touching Bitcoin until either we break down from 29.6k, in which case I'd enter a short position and go for lower targets, or until we break upwards clearly from this red horizontal this red horizontal resistance box, which is basically the top of this kind of range we've seen here since the 24.5k retest, in which case I'd enter a long position. It's quite simple, and that's what I'm looking at for a short, medium-term price action. Unfortunately, there's not really a clear-cut way to trade short, medium-term price action right now. There hasn't been for a pretty decent period of time. In fact, this whole sector has been a little bit hit or miss with short, medium-term price action. You guys are probably aware of that in terms of my vagueness in analysis in regards to it, but that's all I can really give you right now on that topic. Yeah, look, there's various mixed signals right now on a daily chart. RSI line that we previously flipped for support is now flipped back for resistance. That's bearish, but at the same time, stochastic RSI is bullish. Volume's not particularly bearish. There's various, conflicting indicators. It really doesn't really give us much to work with. I would just recommend sticking to breakout trading, and especially in a time when spot ETF for Bitcoin is basically going through to the approval or disapproval process, which within potentially even the next couple of days. I mean, those ETFs have been, put into the registry for tomorrow. So basically, there could be a decision any moment now. And so, with something like that on the horizon, you could see a dramatic move come, to the upside of a downside very shortly, and a move that might not be expected because we don't know what the result is for that ETF yet. That's not something we know of. We're not certain about what the result is going to be. And so, with general fundamental events, there are two types of fundamental events. There's types of fundamental events that are priced into the price action. There's types of fundamental events that lead to dramatic price action, either up or down. And things like CPI, things like FOMC, which, yes, they can be predicted to a certain extent, but largely they do rely on the actual data release itself, and that's when you see the big spike. That is similar to what we're seeing with the ETF here. So expect random volatility on Bitcoin at some point, and knowing that you should expect that, you shouldn't really be taking any short-term high-leverage trades. Wait for the breakouts of the ranges. That's the logical thing to do. Well, that's what I'm doing at least, and I can't really tell you what to do, but that's what I'm doing. And I do see this range still as a zone in which Bitcoin can reasonably go downwards, retest lower levels very confidently, and if it does so, that's great. Macro structure will not be damaged, and if it doesn't do that, that's awesome as well. Macro structure will certainly not be damaged by going upwards. But speaking of macro structure, that's where I want to get into the next part of this video here. I'm going to keep it short, guys, because my throat is giving up on me as I talk here, but and I know I sound like a broken record complaining about my sickness. So apologies, I'm a bit of a drama queen when it comes to sicknesses sometimes. But what we have here on the logarithmic weekly chart, okay? And if you're wondering why I put it on logarithmic, it's because logarithmic is in relation to price ranges, not dates. So people ask, oh, Wolf, why are you looking at the logarithmic chart? Why don't you look at linear? It's because when there's a big price range that makes it ugly to look at linear charts, that makes it hard to analyze linear charts, you need to look at logarithmic. I do not recommend looking at logarithmic charts on any short-term time frames whatsoever. That is simply not correct from an analytic perspective. I know that this logarithmic chart is true. I know that it works because the charts line up perfectly with this chart. Now, what am I talking about here? Well, first and foremost, we have an uptrending support line on the logarithmic Bitcoin chart. As you can see here, that shows us a very clear support line. Now, uptrending support lines on the logarithmic chart eventually will have to break to the downside. That is something that is certain, but it could take a very, very long period of time to do so. We saw a perfect example of this. If we go ahead and delete these lines here, these useless lines, we saw a perfect example of this in 2015. Uptrending logarithmic chart line here. It took a very, very long time for this to break to the downside. We saw an entire bull market before it occurred, but once we finally broke to the downside, we saw a bottoming range, and we didn't get back above it for a while. And you can see basically this line held true for a very long period of time. In fact, when we did finally break down below it, we saw a bearish resistance support flip and went down further to the new lows. So, these lines do exist for a reason. They are very much important to chart up. They do, and even look, after all this random shit that happened here, it still was retested over here. As late as 2020, it was valid, and it stemmed back from 2015. So there's definitely an argument to be made that, uptrending lines on a logarithmic chart on Bitcoin have had their historical validity. Really, they've held their position in that regard. And we've got another one here, so who am I to ignore it? Okay, it could be a similar situation to what we saw in 2015. We have an uptrending logarithmic line here. It's uncertain as to when it will break to the downside, but eventually it will, and it could be, this month, it could be years away. Now, in terms of logically speaking, if we extend this line upwards, okay, and we bring it upwards to, say, Q4 2025, and we say, oh, this has to hold until Q4 2025, this is what we're expecting Bitcoin to look like if that were the case. Is that possible? I think it probably is possible. I don't know if it's likely, though. I don't think Bitcoin will probably... I don't think it's likely Bitcoin reaches 200k in the next bull market. I think that's a little bit of an overshoot. But I think it's reasonable to say that this logarithmic line has a chance of holding for a decent period of time. And so I made the mistake the other day, and I think a lot of people have made the mistake now, of saying, or of just instantly assuming that this is actually a bearish ascending wedge formation. I don't think that's a logical assumption to make at all. I don't think we have the data to say that, okay? Yes, you could say it's an ascending wedge formation, but overall, I think the most important part about this line is the fact that it is a logarithmic uptrending support line. That is the most important part. I don't want to get into confusing people about wedges and whatnot. It doesn't matter. It doesn't matter whether it's a wedge or not, because the line is still important. If we break it to downside, it's still going to have the same effect if it's a wedge or not. So there's no point, adding that bearish bias. There's no point. It's just the line is what matters. It's very unlikely we break the uptrending line to the upside. If we do, it probably wouldn't be before the point is, look, the point of what I'm trying to say is this. We had a very important uptrending line in 2015. It lasted for a very long period of time. It's reasonable to assume it could happen again. The fact that this line exists doesn't necessarily mean that we need to break down below it right now. And I think that's what the bearish wedge formation might indicate to some people. I think that it's very important to check your bias in that regard. This uptrending line here on the logarithmic chart could actually be a fundamental part of Bitcoin's support for the next cycle. And I think people really need to watch that. Last topic, guys, the S&P 500 correlation. Bitcoin correlations in general to traditional markets. I do find it funny. I always find this funny. I always have a little bit of a laugh about it to a certain extent, although I am relatively serious on the topic as well, because I do understand the concerns about it. But, we've gone upwards so much here in the S&P 500. The entire time people have been screaming we're going to go downwards further. I mean, if you think back to October 2022, people were saying we're going down to 2K on S&P 500. Now we're up here. We're up 25, 30%, whatever it is. What are we up? 30% now, 31% here on the S&P 500. It's been 270 days since the bottom. More than that, 280 days since the bottom. It's like, where's this correction people have been talking about? I'm not saying it's not going to come. It certainly could come. There's certainly fears of it coming. The fact of the matter is it's not here yet. And the fact of the matter is, people rely on this chart dragging down Bitcoin. The bears do, at least. And I just don't see that being the case at all. I mean, even if we're looking at the last couple of months or so, what has the S&P 500 done since, say, look at the bottom of this recent peak here, say May 2023, sorry. S&P 500 has moved up 12%. It's seen a massive rally here from May 2023. What has Bitcoin done since May 2023? Okay? Basically nothing. It's moved sideways. It's still in the same range. May 2023 was over here. We've moved upwards 5% since May 2023. We've seen a sideways range, essentially. Yeah, we saw downwards price action, upwards price action, but overall we did nothing. S&P 500 has pumped massively. 15% of the S&P 500 is a huge, huge deal. For Bitcoin, 5%, 10% is nothing. The point I'm making is this. The bearish argument is kind of relying on traditional markets. It's relying on traditional markets dragging down Bitcoin. Traditional markets, first of all, are going upwards. And second of all, the correlation between traditional markets and Bitcoin that would have to be there for Bitcoin to be dragged down by traditional markets is decreasing. It doesn't exist anymore. And this is shown very clearly by a long-term correlation chart. Okay, look at this chart here. Pause the video. The baseline is a 0% correlation. We have, okay, gold and the S&P 500, which are historically pretty positively correlated to Bitcoin, coming down for over a year now, okay, and negatively correlating to Bitcoin. And what I mean by that is their correlation is decreasing. And we have the dollar index, the DXY, and the VIX, which are negatively correlated to Bitcoin, doing the same thing, right? Basically, all of the traditional markets combined, every single important traditional market chart you can look at that has previously been correlated or reverse correlated to Bitcoin is becoming irrelevant. Bitcoin is becoming independent from these charts, more and more independent. And when has this started happening? It started happening basically after QT. I have a theory, guys. My theory is that Bitcoin has only ever been correlated to traditional markets because of quantitative easing. I don't think there was sufficient evidence to say that Bitcoin was overly correlated to traditional markets before 2020, during the COVID drop, during the start of quantitative easing. I really don't think that Bitcoin was that tied to traditional markets before then. Perhaps reverse correlated to the dollar, but that's about it. I think 2020, 2021, 2022, during all that quantitative easing, during all that printing, really pumped all markets, and hence Bitcoin correlated quite tightly to traditional markets. And since the vast majority of people in cryptocurrency came into the space during that time, that's all people know. And I don't think people are willing to accept the reality that Bitcoin actually is not really that tightly correlated to traditional markets. And hence the argument that traditional markets are going to drag Bitcoin down miraculously somehow, right, is actually not that strong. Now, if it starts to occur, and if the correlations start to flip back, cool. then I'll adjust my opinion. But at this point in time, look at this chart. The chart doesn't lie. I'm just saying what's on the chart here. The correlations between Bitcoin and traditional markets have been declining since the Bitcoin bottom. What does that show you? It shows you that the cyclical theory on Bitcoin is more important than the correlations to traditional markets. That's what it shows me, at least. So we'll monitor it, and if it changes, I'll let you know, but that's the case right now. So guys, that's the video. And I'll tell you, mate, I nearly bloody stopped making this video because my head is aching. But I just got it out here. I hope it wasn't too painful to watch. I understand it's probably a little bit choppy from a verbal perspective, but a few things just before we end it here. Bitget exchange, 5 times lower fees than Binance, non-KYC, all that stuff, guys. Best exchange on the market. I reached out to these guys for a partnership. They did not reach out to me. I have an exclusive kind of promotion link, not my user referral link, but an actual promotion link for exclusive rewards using this exchange that have just been released. I'll look into it a bit more tomorrow, but I'll leave it in the pinned comment so you can check it out. If you haven't signed up to the exchange yet, you can use my referral link to sign up. But regardless of that, there is an exclusive promotion link, and check out the rewards in that promotion link. It's a limited time there. And yeah, Bitget exchange, lowest fees in the game, etc. Yeah, check it all out. And then we've got Crypto Academy, guys. So this is a place you can learn how to trade, become a trader 10-unit course. Check out the website. Check out all the stuff on the website is technical indicators, candlestick patterns, market psychology, everything, how to find trades. We teach you everything in this course. And you can check out the website with all the information, and also check out the email address on the website. Throw us an email, ask us any questions. We'll send you back a payment information. We'll also send you back a full video explaining the course, running you through it, showing you what it actually looks like so you can make an educated decision before you make a payment. And then finally, guys, last but not least, VIP group on Telegram. We trade altcoins on a sub-daily basis, making good money there. 79% win rate. That's exceptional. If you don't know much about trading, it's very, very, very unusual to have a win rate above 80%. So a 79% win rate is absolutely exceptional. Go ahead and check out all the information, previous trading results, what the group entails, prices, etc. in the information group on Telegram. That's all free to join. Thank you guys for watching. Hope you enjoyed. Again, sorry for the painful watch, and I'll catch you in the next one.